If you've heard anything lately regarding the stock market, you should be aware that one of the most interesting stocks available is Tesla. From the beginning, Tesla stocks have consistently been the subject of news coverage. Many have deemed it a high-risk, high-reward stock, and its CEO is a controversial superstar. Tesla's popularity stems from its almost limitless potential. In 2021, it garnered so much attention that its market capitalization reached is the market's excitement about Tesla stock justified. Now that you know this, would you want to purchase Tesla stock? Watch to learn about important information that stock experts have disclosed. On February 1st, Tesla's stock dropped 11.9-day prolonging losses for the second day following CEO Elon Musk's recommendation to sell 10 of his stake in the electric vehicle firm over the weekend. The stock saw a nearly 5% decrease on February 3rd, which moderated the firm's mostly rising trend for the year. This dip is expected to be the greatest of the year. In 2021, Tesla's stock has increased by over 47, more than doubling from the previous year. The business has announced greater automotive margins and has overcome a scarcity of chips to increase production while competitors face difficulties. Current and former board members, such Chairwoman Robin Denholm, Elon Musk's brother Kimball Musk, Iron Price, and Antonio Garcia have sold hundreds of millions of dollars worth of Tesla stock since October 28, 2021, when the company's market cap surpassed $1 trillion. Substantial options package was awarded to Musk in 2012 as a component of his CEO performance plan. His fortune is obtained from stock awards and gains in the value of Tesla's stock, as he does not receive a salary or cash bonus. The 22.8 million shares that were awarded in 2012 with a strike price of 6.24 cents will expire on August 13, 2022. In a research published on Monday, Jefferies increased its Tesla price prediction from $950 to $1,400 in spite of recent insider transactions. Analyst Phillips said that Tesla is approaching a position where it can combine speed and affordability objectives, which are just as important to Elon Musk's aspirations as profitability, without ignoring execution risk. Like many other analysts, he anticipates Tesla to maintain its dominance in the battery electric segment of the new vehicle market for many years to come. On the other hand, both newcomers and well-established automakers are posing a threat to Elon Musk's automobile business. This week, we'll see the public debut of Rivian, an electric vehicle company supported by Ford, Cox Automotive, and Amazon. Customers will receive the 3-row 7-passenger sports utility vehicle, or Roan, early next month. A Chinese car maker named Geely has unveiled a powerful battery-powered electric car to rival Tesla's postponed Semi. According to data issued this week by the China Passenger Car Association, Volkswagen sold over 12,000 fully electric vehicles of its I series in China in October, and over 16,000 electric vehicles in China overall last month, although Tesla only sold an estimated 13,725 vehicles. It chose to export 40,666 of the 54,391 electric vehicles it produced in Shanghai. Tesla China tends to start quarters weekly and end them strongly. In September, for instance, the country shipped over 50,000 units. As a result, Michael Dune, CEO of automotive consultancy Zozogo, cautions against drawing hard conclusions from October's numbers. Uncertainty around the company's semi-development and partnership with Hertz, the rental car operator, may also be a burden on Tesla shares. According to the firm, Tesla is currently developing its semi-manufacturing, but Pepsi executive expects Tesla will supply some of its heavy-duty trucks to the industry's biggest players this quarter. Hertz declared that it will be adding 100,000 electric cars to its fleet of rental cars from Tesla, and interim CEO Mark Fields attested to the agreement between the two companies. However, Musk has declared that there isn't a contract with Hertz for the large order. Although it's hard to anticipate, Tesla has a lot of promise for the future. Investors in TSLA should be realistic and take into account any hazards that the company may encounter over the next 5 to 10 years. Even with substantial government incentives like tax breaks for alternative technologies, Tesla cars are still unaffordable. With a starting price of $94,990 before any incentives or rebates in November 2021, Tesla's Model S is still quite expensive. The most recent model from Tesla, the Model 3, is still too expensive for the majority of drivers at $43,990 before tax credits and petrol savings as of May 2021. According to Vertical Group analyst Gordon Johnson, the automobiles are expensive for Tesla to produce as well as for individual consumers to buy. On average, the company lost $14,000 for every Model 3 that was sold in 2018. Nonetheless, as the business expands, these numbers ought to rise. One of the company's early problems was running out of batteries to power its devices, so it's possible that Tesla's battery supply is running low. Although it is still under construction, Tesla's Gigafactory in Sparks, Nevada, is anticipated to solve the company's battery dilemma. The lithium-ion manufacturing facility, which is expected to occupy more than 1.9 million square feet, will enable Tesla to increase annual output to above 500,000 vehicles. Logistical and regulatory difficulties often impede large-scale projects like the Gigafactory, and it's not clear if the factory will be finished on time. The Nevada government has approved the Gigafactory, which is expected to create an extra $100 billion economic activity over the next 3 decades, even though the plant is just 30 built. Musk has made hints that the company could need to build more than one Gigafactory in order to meet demand and maintain a high level of satisfaction among investors. This would involve a significant amount of capital expenditures, or CapEx. 1455 of all plug-in electric car sales worldwide in the first half of 2021, Tesla was the top producer of these vehicles. VW Group held the second largest share of manufacturers at 12.52. Tesla's appeal diminished in 2014 and 2015 when petrol costs fell. After all, Tesla's vehicles are competitive with gasoline-powered vehicles, which are also more affordable due to declining petrol prices. Petrol costs simply need to be low enough to keep older cars on the road in order to negatively impact these prices. They don't even need to be at decade-low levels. There are 2 concurrent sources of the issue with TSLA's gas. The first problem is that oil output is increasing worldwide. The once dominant peak oil idea seems to have been refuted. Thanks to horizontal drilling and hydraulic fracturing, oil companies have improved their methods of producing oil, with worldwide production increasing annually between 2009 and 2019, while internal combustion engines are becoming more fuel efficient. Petroleum supplies are expanding. The Bureau of Transportation Statistics reports that light-duty passenger automobile fuel efficiency in the U.S. is still rising on average. If Tesla hopes to become a well-known automaker and generate consistent cash flow, it will need to sell a lot more vehicles. There is less chance that people will convert to electric vehicles if petroleum-based fuels continue to be a significantly less expensive option. Now, it's noteworthy to note that Thomas Davenport might have invented the first electric automobile as early as 1834. Therefore, Tesla isn't the first firm to make such. While Tesla seems to be the most popular model so far, 2 notable competitors, the Chevy Bolt and the Nissan Leaf, were not as successful at first because of their high retail prices and short driving range. The Nissan Leaf has a range of up to 226 miles and begins at $27,400 before incentives as of October 2021. Apple Inc. thinks it can take on Tesla in the transportation space. While Google has also made investments in the vehicle sector, it makes sense that businesses with larger current client bases would worry Tesla. Musk famously declared, "We're going to spend astounding sums of money on CapEx," referring to his business. Return on investment is necessary, even though many investors desire large capital expenditures. This seems to be particularly true in a nascent sector beset by bankruptcies. Tesla has already invested billions of dollars in the creation of the Model 3 and Model X cars, and the battery factory won't be any different. In a Q1 2021 SEC filing, Tesla predicted that capital expenditures will probably reach $4.05 billion or possibly $6 billion annually. The same quarterly report made, it's hard to dispute Tesla's success as an electric car maker given its trillion-dollar valuation. There are still a lot of possible obstacles to overcome, though, such the challenges of developing inexpensive EV technology and the dangers presented by rivals. Are you in favor of the Tesla split? Please leave a comment below.